Hello, everyone. I'm Lizette Gabriel, and I work as a librarian in the Business and Economics Department here at the Los Angeles Public Library. Welcome to today's presentation called Your Savings. This program is part of an ongoing series of programs intended to support financial savings in February for America Saves Week and is brought to you by the Alliance for Economic Inclusion and LAPL. Today's presenters are Victor Jimenez and Nora Perez, volunteers from the Alliance for Economic Inclusion, or AEI. They will talk to you about saving money for goals, large purchases, and unexpected expenses. They will also discuss proven saving strategies and tips on the best ways to save. Please send us your questions throughout the program, and we will have a Q&A session after the presentation. I now like to pass the presentation over to Victor and Nora.
Thank you, Lisette. Good afternoon, everyone. My name is Victor Jimenez, a member of the Alliance for Economic Inclusion.
Hi, I'm Nora Perez, and I'm also part of the Economic Alliance of Conclusion. So, welcome.
Yes. So today we'll be discussing, savings. It's LA Saves Week, and we'll be discussing the Your Savings module. Next slide, please. Quick disclaimer. This presentation represents the views of the speaker and not necessarily those of the agencies we represent. This presentation cannot be reproduced or distributed by a third party or a third party website without prior authorization. Next slide. Your savings. So like I mentioned, we're going to be discussing, your savings, and the importance of it, how to develop a savings plan, what benefits does it bring, in you having a savings. Next slide. So I'd like to start off with what is savings? The idea of it is obviously is setting money aside, for you to save. Next slide. So the key takeaway of this presentation would be setting money aside every time you get income, regularly saving money, even if it's only a small amount, over time, as we know, starting small can make a big difference over time in creating a larger savings. Next slide. So defining savings, what does savings actually mean? So saving is actually putting money away. That's the best term that I can define it as. Basically, putting money away that you can utilize for a goal that you have in mind at a later stage in your life. Okay. Next slide. The reason why I mentioned that it has to be with putting money away, it's because some ideas can be misconstrued. And for example, is spending less money the same as saving money? Well, only if you save what you didn't spend. Saving is setting aside money today for the future. Okay. To build savings, spend less money and put some or all of what you didn't spend in a savings account. Some people may have the idea or the thought that if they were able to save, money on an item they purchase, that they are saving, money. But that may not necessarily be true if you don't actually put the savings that you save in the item that you purchase and you put the money away in an account. Just being able to get a good deal and saving, money and not putting it away is not really going to translate to you saving money. It just means that you got a great deal on a product, but if you're not taking the next step and putting the money away, then you're really not saving for yourself. So let's make sure that we don't misconclude those two ideas or terminologies. Next slide. Now, why save money? There's many different goals that you may have in mind that you may want to accomplish. Okay. And usually that's the best way to start off, by saving to create a goal. Have a goal in mind, something small, create a small goal, because then you'll have a purpose for you to save. Other reasons are obviously just to build wealth. You want to build wealth and have extra money saved there. Okay. Emergencies. You want to have money set aside for emergency situations. As we know, we can never guess or estimate what situations we are going to be confronted in the future. Okay, so having money set aside for those emergency situations will be a great idea. Times with less income or more expenses, obviously, we can run through a scenario of not earning the same amount that we were used to earning, or all of a sudden we incur extra expenses, all of a sudden expenses that we weren't accounting for. Our car breaks down, and it's an extra added expense that we weren't accounting for. Well, if we had a savings, then we would be able to take it from there. Other things is peace of mind. Many people that do in fact have a savings account have a better peace of mind knowing that they have money saved, where they can rely on it. So it just gives them a better peace of mind knowing that they have some money saved and they'll be able to use at any time of need. And there could be many other reasons why you would be willing to save money. Could be for retirement, a vacation, anything else. But we'll be going over more of the reasons. Next slide. Now, here are some quick tips in finding ways on how to save money. Okay, so one of the primary advices that I give people is, obviously, when you start thinking of saving money and you start having that mindset, is to create a budget and total and write down all the expenses that you have. As small and as minimal as they may seem, everything adds up. One of the examples here given is being ATM savvy. So if you have an account, and you are utilizing your debit card to withdraw money out of many different ATMs, be conscientious of that. Sometimes people don't pay attention to the small little fees that they are paying to utilize an ATM, because they use the ATM card to withdraw money from an ATM that does not belong to the financial institution that they bank with. So they get charged a fee. They can round off from, it can go from $3 to maybe even $10, So when you start to think about saving, you got to start thinking about ways where you can cut back and save, on things that you utilize, that you buy. Not just about, well, do I have to make more money to be able to save money? You have to know how to budget yourself, and these are some of the things that you could keep in mind. So looking for ways where you can use the ATM without incurring a fee. And obviously the best ideal way to start with that is to talk to your bank. Talk to your bank and find out, I want to avoid paying fees. What can I do? Which ATMs can I use? Where can I go? I don't want to be able to, and they can give you, obviously, whether it's a network of ATMs that they work with where you won't get charged a fee, what to do so that you won't incur any fees, whether it's on the ATM or on your own actual account, which is this, the next tip that they give bank on it, is, and if there isn't a way for you to find a solution for that, then you have the option of shopping around with many different banks. Many different banks offer many different products. As we always, say, all the banks probably offer the same type of products, but they cost something a little bit different, but the cost might be different as well. So you want to do a little bit of homework and shop around, just to see, what accounts are out there that are free of charge, or, that are really low cost to you, if there isn't a way for you to avoid, paying a fee, but take the time to just do a little bit of homework on that. You want to start off where you're keeping your money, which is your account. Another tip here is brand bias. So being conscientious of that. Before you buy something, consider whether you're paying more money for a brand name. It may be worth it. At times it may be worth the extra cost, but sometimes buying a different brand or a generic item can be just as good or even better. If you spend less money and add it to your savings, that's where you can start off with. You may not need to have uh, the best brand. If you can substitute it with a different brand that is a lot cheaper, and you're going to get the same results, and you can save money in doing that, then why not do that as well. Like I said, you can look into these different alternatives here, and this is where you can start. You can't always look at, well, do I have to make more money to start saving? No, you can look at your current budget and see, where can I make some changes here to where I can have extra cash where I can put away. Okay, next slide. So remembering the key takeaway, that we just discussed, is set aside money every time you get income. Regularly saving money, even if it's only a small amount, can make a big difference over time. Okay, so like we discussed, you got to think of a small amount, and everything adds up. If you start looking at many different ways where you can avoid paying fees, where you can substitute an item, where you can, lower the cost. If you're a person that every day you buy your coffee at Starbucks, and you're paying $5 to $10 a day, if you can find a way to change that habit, and instead of you buying a coffee every day, if you make the coffee at home and you avoid that extra income, well, you got to look at it like, okay, well, here is where I can, save a little money, whether it seems like a small amount in increments of $2 to $3 to $4 5. It all adds up if you make the change in many different ways. Okay. Next slide. Now, where to build your savings? That's obviously an important thing to have in mind, and we'll be going over this. Next slide. So, when you think of that, obviously you want to consider the advantages and disadvantages of saving options before choosing where to build your savings. So you want to have that in mind. How are you going to start? Where are you going to start? And what are some of the advantages and disadvantages of where you plan to keep your money or save your money? Okay, next slide. So where to put your savings? Many options. Each one has advantages and disadvantages. Next slide. And obviously, some of the most obviously highly recommended options would be to have a savings account where you can put your money at, because if you consider putting saving money, but you're going to keep it at home and you're not going to keep it in an account at a bank, obviously the disadvantages of that is like, where if you keep it at home, if you keep it with a family member, if you keep it with a friend, obviously it can be quick access, no fees, but it's not secure. It could be lost or stolen. If something happens to the house, it can be destroyed during a flood, a fire, anything like that, and it's not insured if any of those things happen. Whereas if you would keep it in a savings account, there's also many different options, that you can choose from, in the type of accounts that a financial institution may have to offer. and one of them is a money market deposit account, which is similar to just a regular savings account, which most people are well familiar with. But a money market account usually requires maybe a little bit of a higher balance, and it would offer usually a better interest rate. There's also CDs, which are certificates of deposit, which are term accounts that rely on paying you a better interest based upon the amount and the term of how long you're going to keep the funds in with the financial institution. There's also other options such as purchasing U.S. savings bonds, retirement accounts. Okay, whether it's something that you directly open with the bank, which is an IRA account, or whether it's something that you establish with your employer, which in a lot of cases may be a 401k, where you can obviously save for your retirement. And the last thing could be investments such as stocks, corporate bonds, or mutual funds. Okay. Next slide. So, like mentioned earlier, you want to keep something in mind, which is really important, and obviously, something to consider is whether your money that you're obviously, saving, it's insured. And this is probably one of the biggest things that people are concerned about. And knowing that wherever you're keeping your money is insured, trust me, it offers a lot of peace of mind. And this is why you want to consider obviously establishing an account at a financial institution that is insured by either FDIC, or NCUA, which is the Federal Deposit Insurance Corporation, which insures your your funds up to at least 250,000. Okay, so if you're considering of establishing an account at a credit union or at a bank, look for these signs, which should be posted in each one of the teller stations or directly in front of the bank, for you to make sure that they are financially insured. Next slide. So other things that are benefits of establishing an account with a financial institution, it's that you get the opportunity to earn interest. Interest is money financial institutions pay you for keeping money deposited with them. So this is an extra, like I said, an additional advantage that you gotta have in mind, knowing that there's opportunities for you to make more money based upon your own money that you're saving. So you want to be conscientious of that, and at times, obviously the interest is compounded, and you can earn interest off of the interest that you're already making. And the good thing is that obviously there's many different financial institutions that offer many different interest rates. And that's another thing that you got to keep in mind and do a little bit of homework and shopping around and seeing, who has the better rate out there that would give you, a better return, on the money that you're saving. What type of product, is best suited for you, where you're going to get more in return. Okay. Next slide. When thinking of interest, interest rate, you always got to keep in mind the APY, which is something that you would always hear whenever interest rate is quoted to you. You're going to hear the terminology used as APY, which is the annual percentage yield. So the annual percentage yield actually reflects the amount of interest on a yearly basis. Okay, it's a little different from the interest rate. It can differ in some instances. It can be a little different, not the exact same, figures. But more often, that's how your money is compounded. The higher the APY, the more interest you earn. Okay, so keep in mind that when you're doing a little shopping around and considering, for you to get a better rate, between different financial institutions, that you compare the APY and not the interest rate. Okay, that's something really important for you. If the APY is not quoted to you, that you ask what the APY is, because that's what you want to use to compare who is gonna eventually pay you with the higher rate. Okay, next slide. So remembering the key takeaway: consider the advantages and disadvantages of saving options before choosing where to build your savings. So once again, just going over that, the big advantages, obviously, we went through is obviously knowing that your money is secure. You have the opportunity to make additional money off of the money that you're keeping in if you're getting a good interest rate. You have opportunities to invest, to where the disadvantages of you not having an account and just keeping it at home, it is not protected, it is not secure, it has a lot of risk involved, and also it's easy to access, where you may more often than not utilize the money that you had saved there, and been more tempted in because you had quicker access to it. So keep that in mind. Next slide. Okay, so saving for unexpected expenses. Obviously, this is something that you want to have in mind, and you want to actually, and in so many cases, be the main point and source of why you are saving. Next slide. We all have emergency situations that can happen, where we're not accounting for, things that, we're not expecting. And trust me when I say that, setting aside money, it's gonna be obviously a big help. And setting aside $500 to $1,000 can cover many unexpected expenses. I know to some people sometimes 500 may not seem like a lot of money, but when you are not having any income, come in, if you're going through an emergency situation where you lost your job and you don't have any sort of income coming in, then those $500 or $1,000 that you set aside and you save for these type of situations is going to be a lot of money. It's going to be a big help, so always think of that. Obviously, the thought of you going through a situation, nothing is ever an assurance that we're not going to fall through a situation. We're not going to fall in a situation where we're going to be in need of funds, So keep that in mind. Next slide. So why save for unexpected expenses? Because life happens, because unexpected things occur, like we see on the slide here, obviously if you own your own home, you can have an unexpected expense that, you need to take care of, whether it's in your home, if you own a home, whether it's with your car, if you own a car, if you don't own either, even a situation with a health situation that, all of a sudden you're confronted with, an unexpected expense that you were not thinking of that you were going to have. And I think we all, are well aware that anything like that can happen through our lives, that we're going to have situations where we did not, hope they would happen, and we're confronted with them. And if we're well prepared, we'll be able to endure and handle them, a lot better than if we were not prepared. Okay. Next slide. Now, emergency savings funds goals. So if you pay for unexpected expenses with money you have saved, obviously you avoid creating debt. Okay. So, I know nowadays, we're all, well, I guess, privileged to have several credit cards and the ability to, borrow money, but that shouldn't be the mentality that you should have, in thinking that, well, my safeguard net is my credit cards, or people that I can borrow money from, you should not have that in mind. You should have in mind that if you're ever confronted with a situation, an emergency situation where you're in need of funds, that you're not going to resort to creating debt, because if you do that, then how long is it going to take you to get out of that debt, So once again, the first resort should not be for you to, create that. You should, be well prepared, you know, having money set aside for an emergency situation. Um, it takes time, it takes good commitment, it's not something, that is going to be done instantly. Creating a good habit in saving takes time, and a lot of commitment. And it's got to be a cycle, that, let me tell you, it's well worth doing, it'll improve, your financial health and stability. Okay. Just by you having a better peace of mind, knowing that you have money saved on the side for any situation that you may be confronted, and you're well prepared. Like I always say, if you're well prepared, it's less likely that you're gonna incur a situation than when you're not well prepared. When you're not well prepared, it seems like everything just happens, everything just comes your way because you're not well prepared. When you're well prepared, it seems like things don't happen to you. And if they do happen, obviously you're well set to be able to handle them, where you're not gonna, see any lasting effect. Next slide. So once again, just the idea of having a savings account is, anticipating changes to income and expenses. Your income and expense can change. Sometimes we have the thought in mind that if we have a great job, if we have good income coming, that's going to be something that is going to last forever. And we're going to have this specific income, this specific job all the time, and it's only going to get better. But nothing is ever guaranteed. Things can change. You can lose your job. If you had an extra job on the side, you were getting extra hours, getting overtime, all of a sudden things like that, can change. Where you're not making any extra hours, not having that extra job, so the income is going to definitely change. Okay. Other changes that can affect that is you may have bills that arrive only once or every few times a year where you forget to account for them. Okay. Whether it's taxes or any other expenses, car insurance, or all of a sudden just your spending limits increase, temporarily, for whatever case that may be. You incur an extra expense that you were not hoping for. So these are great things that you got to have in mind, that any of these three things can happen at any point throughout our lives. And once again, that's why it is important for you to, have a savings account, have that safety net where you can rely on and go back and say, this is what I saved for. This is the time where I can use these funds now for. Next slide. So an emergency savings fund is part of the financial health. Setting aside 500 to 1,000 can cover many unexpected expenses. I think we went over this and said, when everything is going well and you're, don't have any changes in the incoming income, 500 to $1,000 cannot seem like much, but whenever you are in dire need of funds because you don't have any income coming in, this amount obviously is going to look like a major help. Okay, so don't look at it as a small amount. This is something that you can start off with. You can start with even as low as setting, if you don't have a savings account at all, you want to say, okay, let me just start off with $200, see if I can save $200. If you can manage to save $200 within a couple months, then obviously you want to start increasing the amount, to 500, 1,000, 1,500. Then you want to start increasing the amount so you can have more. Okay. You want to get to a point where at one point or the other, you have, enough saved for like at least a good estimated amount is for you to have 6 months worth of expenses saved. Okay. Next slide. Saving for your goals. Okay. Next slide. So create a plan to save money for your goals. Okay. We'll be talking about this. Next slide. So what do you hope for, or what do you want in life for yourself? What about for your family? So there's many different reasons of what you will want to save for. Like we talked about some earlier ones, but obviously if we can see in this picture, there's many other, goals that you can set in life, whether it's for yourself, for your family. You can, like it shows on here, you can save money for additional education, vacation, marriage, buying a home, getting married, once again, buying a car, a house, things like that. Well, those all are additional expenses that we're going to incur. So it will be good, obviously, to start saving so that you're able to accomplish, these dreams. Next slide. So SMART goals, okay? So be specific, measurable, action oriented, reachable, and time bound, okay? You gotta, stay committed. I would save $10 each month for 6 months by getting cash at my bank ATM rather than the ATM that charges fees, so that I have $60 for holiday gifts by November 1st. So like we talked about it earlier and said, be conscientious of the fees that sometimes you pay, that we may not be well aware of, that can add up throughout the year, sometimes if we, look at something as small as a $2 fee for, something that, we could have gone around and not have to pay, if we're continuously doing it, add the total amount throughout a whole year cycle and see how much money you are spending. Okay, so this is a perfect example of, ways for you to save. Next slide. So more likely to achieve your goals. So these are some tips and ideas on obviously how to stay committed and making sure that you stay on point. Okay, write them down. Once you come up with the goal in mind of why you want to save, write it down, post it. Post them at, everywhere you could think of. If you want to put write down your goal on a sticky note, put it in your office, put it in your refrigerator at home, put it in your car, anywhere where you can continuously be reminded of it. If you want to share it with someone, share it with your spouse, with your friend, coworker, friend, family member, so they can continuously remind you of the goal that you have in mind and you can stay focused. Okay, next slide. So how much money should you save for your goal? What are you saving for? You got to obviously have that in mind. How much would it cost? How much of that cost do you need to save? What is your deadline? So all of these questions you need to have in mind to know, obviously, how much money are you going to need? So what are you saving for? Is it for a pair of shoes, which is a small goal? Is it for a car, which is, a much bigger goal? What's the cost of it? Okay. And how much of that cost do you need to save? What is your deadline? So create a time frame, of, how much, and how long do you want to save for. Next slide. Obviously, large expenses. Many goals are related to large expenses. Large expenses generally require more money than you have left over after 1 or 2 paychecks. So you got to be patient. You got to be patient. You got to stay committed, and you got to make certain sacrifices. These large expenses, are going to take time. They're not going to happen, right away. It might take, months. It might take years, but you got to stay committed. Okay. You cannot expect for it to happen with a couple paychecks, a couple months. Is going to be a longer period of time for you to reach these large expenses. Next slide. So create a plan to save money for your goals. Okay, make sure you do start off with that. Next slide. Next slide. Talk about other specific savings accounts. So some special accounts enable people to save more money, and we'll go over some of these. Next slide. So match savings account. These are other type of accounts that might encourage you to save even more. Encourage saving money for a specific purpose. So usually run by local community-based organizations. So these type of accounts, these are other accounts that you can consider. that might motivate you. There's accounts that maybe your employers might have where they match, whatever money you're going to be saving, which can be like we talked about earlier for a 401k. There can be, community-based organizations that offer some type of programs, where, if you save a certain amount of funds, maybe you have a specific goal in mind, like purchasing a house, and depending on the amount that you save, they might be able to either match or, contribute to that goal that you have in mind. So doing a little bit of homework and finding out, specifically, what other alternatives, what other options do you have for the specific goal that you have in mind, could be a good thing for you to do. So take your time and just do a little bit more of homework, to find out, what advantages do you have, or what other alternatives, benefits that you have with other type of accounts that might be offered out there. Next slide. Okay. Allow purpose may include job training, college education. So small business startups, purchasing a home, these are some other options that you may want to have in mind. May require financial education courses, keeping that in mind. Next slide. Some special accounts enable people to save more money, like we talked about, Next slide. Okay, so take action. So what will I do? How will I do it? Will I share my plans with anyone? If so, who? So create a plan, like we talked about. How will you do it? What would you do? And will I share my plans? I think it is really important for you to, take some time, write these questions down, make sure you have an answer to each one of them, and make sure that you start. Saving, it's a habitual habit that you have to create. You have to stay committed. You have to make sacrifices. Okay. Nothing happens overnight. Everything, takes time. And I think if you set your mind, to something that you want to accomplish, that you want to do, you will get there. You will accomplish it. You will do it. Create a budget. Start off with that, and start as quickly as possible. Even if you want to start by saving spare change, do that. Saving is one of the best habitual habits that you can create for yourself. That will be a benefit to yourself, for yourself. Okay. Next slide. And I think we've gotten to the end of our presentation here.
Yes, and thank you, Victor. Great tips. I'm going to be going over this campaign that helps you meet the goal, savings goal. So it's LA Saves. Like Victor said, start small, think big, set a goal, make a plan, and take action. It's at lasaves.org. So next, please. So good credit management is important, right? Save on interest and late fees. It's important to plan to build and maintain a good credit history. Good credit saves money. Bad credit costs money, right? Think of credit as a tool to be used wisely. And employers and landlords and insurance companies may use credit history to determine whether you're at good risk. So take control of your credit and save money as well. Save with a healthy credit. A good credit goes beyond the ability to get a loan at the best terms. It also saves you money on things like utilities, rent, and cell phone plans as well. Reach financial security. Begin with the starter emergency fund. Like Victor said, start small. Start small, but begin with it and be consistent. And whatever amount you're comfortable with, this will cover smaller emergency funds while you're getting out of debt. Next, please. We're going to be listening to you about reducing debt. So if you could please press play. Uh-oh. Is it not working? Next, please. So as she mentioned, plan to reduce your debt. It's American Week, so try to get out of debt. Getting out of debt is number 3 goal savers select when they pledge to save. It makes sense because debt can keep you from building wealth, right? And however, a good credit history will result in getting the lowest interest rates and loans and other services, which will put you in a better position to increase your savings and increase your wealth. With planning, discipline, and patience, almost anyone can reduce debt and some accumulating wealth. So let's start today and enroll in the lasaves.org and take the pledge. It's simply a promise to yourself that you're going to save money. Next, please. The Saves and LA Saves is a campaign managed by the nonprofit Consumer Federation of America. It seeks to motivate, encourage, and support low and moderate income households to save money, reduce debt, and build wealth. The research-based campaign uses the principles of behavioral economics and social marketing to change behavior. Our working group decided to join the American Saves campaign and launched our own local campaign through the LA Saves. So make a pledge only to yourself. It's a promise, basically a promise to yourself that you're going to save money for whatever reason, emergency fund, debt, consolation, or repayment, I'm sorry, and a vacation, anything, but just as long as you save money. Next, please. And this is the pledge. Take the pledge. LA Saves. It's simply, if you go on lasaves.org, you put in your name and you set a goal. I'm saving for emergency fund, debt repayment, ownership, or retirement. Anything that you like to save for. Make a plan amount you want to save per month. The number of months. Usually we encourage people to put for 12 months, 50 cents a day, and loose change monthly is $15. It's annual $180 a year. So it's basically just be consistent and save, and this tool, this campaign will help you by doing that, meet your goal. Next, please. And these are examples. examples of how to save money and how much you accumulate. 106, you save 160 a month. In 12 months, it accumulates to 1,920. So like I said, just putting aside 50 cents a day is $15 a month, and 180 a year. So it's you could put whatever you desire, whatever you can. The easiest way to do it is if you have your employer, they could do it direct deposit. Remember, out of sight, out of mind. So you just have, I want to save this much, put it in the savings, and you won't see that money until it's out of sight, out of mind. So next, please. So now we have bank accounts. We have banks that have listed on these bank on, get bank. If you have a bank account, opening a bank account could be one of the most important steps you can take towards reaching your financial goals. Why? Because putting your money in a FDIC insured bank account can offer you financial safety, easy access to funds, savings from checking, cashing fees, and overall financial peace of mind. So we have a list of several banks that are participating. Next, please. They're participating in this bank on initiative. So there is some with low income monthly fees, minimum opening deposits ranging from zero, sometimes it's zero. You don't have to put in anything, deposit, or $50 up to 50. No overdraft fees, no non-sufficient funds fees, no ATM fees for in network. So it's $2.50 or less ATM fees for out of network. So there's several participating banks. If you want to find a bank that offers safe and affordable accounts, consider the account certified in the bank on, which is a national movement to increase access to safe, affordable, and bank and credit unions accounts. So you can find them at the below, which is the dcba.lacounty.gov. So just go on there and you'll see of products that are low income and affordable products. So register, please. So any questions? I think I'm done, but I would gladly, if you have any questions and how to enroll in the lasaves.org or bank on, please let me know.
Thank you, Nora. Thank you, Victor. Thank you, everyone. So it looks like I see a few questions, and let me go with the first one that just popped up. What is the best way to start saving? So I'll let you decide which one answers this question.
Okay.
Well,
I guess.
Go ahead.
Okay. I guess what's the best way to start a savings? And I think obviously from our standpoint would be to recommend it, like set up an account, like Nora talked about. Obviously there's some banks that are participants of accounts that are really favorable to you, where there are really no fees or low fees. So you want to establish the account to have a place where you're gonna know where you're gonna put your funds. Some of these accounts, like she mentioned, they can be as low as $50. So it's not a big amount. Sometimes people have in mind thinking it's got to be a large amount that they need to save before they go to a bank and establish an account. And that's not true. You can start with as low as $50 to $100 to open an account. So you want to have, that established, because that's where you start to open the account. Because obviously from our endpoint, we would never recommend for anybody to just save their money and keep it at home, where it's not insured or safeguarded, So that would be the first step, to start the account and then incorporate a savings plan,
And then register for lasafe.org and we'll help you meet your goal there.
Sounds good.
newsletters and emails just reminding you to save money.
Which is a great start. Okay, so let's see here. Next question. How much money should I have in emergency savings?
Well, for me, I mentioned in my presentation earlier, and I obviously a good advice that you hear more often than not from a lot of people trying to come up with the figure. It's my recommendation is always total up the your expenses for 6 months. What's like mandatory or a must. Everybody's expenses are a little bit different, so you want to total up your expenses and then come up with an amount, your own amount of how much money would you need, to be able to endure a 6 month period. If it's 5,000, 10,000, 20,000, then that's how you would come up with your own amount.
Correct.
Okay. All right. Let's see what else. Okay, here we go. How can I cut back on expenses and save more money? Anybody?
Yeah, and I think like I mentioned earlier, I think when you start saving, a lot of people, tend to say, well, I don't make enough, I don't have enough money left over for me to save. And I think it starts with you cutting back on certain things that you already have an expense on. You got to look at what are different ways where you can save money, even cutting back on, not incurring any fees, cutting back on things that you buy every day. If you're buying lunch, if you can make your own lunch, even on your utility bills, if there's a way where you can enroll into a program where you can save money, look at all your expenses, and see, is there an opportunity for me to save money here? Because that's where you start. If there's an opportunity for you to save money in your daily expenses, then whatever money you were able to save because of something that you did there, that's the money you start putting away. So I think it starts by you creating a budget, looking at your expenses and finding out, is there a way I can save here? And if it's on your car insurance, if you can, do a little bit of shopping and find out, can I switch somewhere else where I can save money? And if, so you can start there. A lot of people think I got to get a better job. I got to make more. No, you can just, with your own expenses, go through all of them and see if you can save money.
Yeah, especially now that we're heading towards the end of the pandemic, hopefully. For those of us who are streaming or doing some of the other expenses that we incurred, those are areas that you might want to consider. Now, there is a curious question. As we consider opening banks or bank accounts, I should say, not banks, do banks do banks charge you a fee to close an account?
No.
That's one of the questions. No? Okay.
Not unless there's maybe a CD, certificate of deposit, and if there's a penalty because you're not going to agree to the term that you had agreed to keep the money in there. But if it's just a regular checking, savings, money market account, no, you're at your will to, decide when you want to close the account, and you should not incur like a penalty unless it's like a term CD.
All right. And another question, for the market savings account, how much is the amount needed to open it? You mentioned an amount earlier, but is there a specific amount?
Yeah, I wouldn't go into specifics because for every bank is a little bit different, but I can just go into a range of an amount. With some banks, it can range from $1,000 to $2,000, $3,000. Okay. It's a type of account that gives you a little bit higher interest, so it requires a larger minimum balance on it than usually like a savings account. You can open it with as low as $100, $300. Obviously, the rate is not as high as the money market because the minimum balance, it's a lot higher.
Okay, great information.
And there's like Victor mentioned, there's early withdrawal. So if you withdraw your money, if you put it for a year, you're going to put it for your whole year, but you withdraw within 6 months, you will incur a penalty there.
Okay.
Fees.
Which is good to know. All right then. So let me continue to check. I don't see any more questions, additional questions. So, thank you again to our presenters, Nora and Victor. Thank you for being with us today. And now I'm going to mention a little part about the rest of the programs for this week. So, our America Saves Week will continue on Thursday, February 24th, with credit reports and scores from 12 to 1 p.m. and ending with Get Banked, Be Ready for Tax Time on Friday. Also, on Saturday, March 5th, from 10 a.m. to 2 p.m., we will have free income tax preparation and filing by UCLA through the IRS Volunteer Income Tax Assistance Program. The event will be held at the Central Library Meeting Room A. Please make an appointment online. Appointments are required and be prepared to share vaccine information. The link will be shared in the chat, or it's actually already popping up there. And again, thank you everyone for joining us today and have a great afternoon.
Thank you, guys.
Thank you, everyone. Bye.